This is Terrence Andre Banks with Information Age Financial Solutions coming to you with an article I got from northerntrader.com. Not a site that I go to regularly, but crash number two. The article was just packed full with such information. I just had to put it to channel and just kind of read it with you. I'm going to definitely put a link inside the description. It just shows you because if you on YouTube or any other social platforms, I can't stress enough because there's just so many different things coming on trading stocks and just different aspects, almost like the crash didn't even occur. I even seen aspects where on Robinhood, when Hertz filed for bankruptcy, that people were trading that and even pushed the stock up when the company went bankrupt. We just live in such a precarious and different time. And when you read articles that have such content like this and just put some clarity and sense to this insanity, it's just refreshing, especially when everything around you is just showing the market continues to go up, and that's not because of fundamentals. It has no basis of what's going on in the economy. It's just that there's no other place to put yield in so many different countries depending on the United States dollar. And so I digress with that, but I'm definitely going to put a link inside the description. I'm going to kind of dive right into this article. President Trump is mocking Warren Buffett for having sold his airline stocks. Druckenmiller crying on TV about having been humbled by the market, while every Robinhood retail trader piling into ever more into calls is laughing all the way to the bank. The professionals gobsmacked at the complete upside down events of markets compared to any other time in record history given the economic backdrop, while retailers giddy jumping into a ticker symbol that's moving valuations be damned. Hey, let's even chase bankrupt companies. Why not? Again, I'm going to put this link inside the description. This is Hertz Global. Holders went bankrupt. The shares were up. Anything goes in this market. I myself have been surprised by the recent vertical strength that keeps running from gap to gap to gap. Again, he puts charts in here and different links here. Look at this chart from the New York Stock Exchange. Wow. On the day of lows, I talked about an awe-inspiring rally coming. Consider me sufficiently awe-inspired. And now the same folks that told me to buy stocks in January, February, right before the crash, are back out and telling me to people to buy stocks again, except this time at much higher multiples and valuations. It's a pretty lengthy article and we'll keep going through. My variant to take here, which may turn out to be very wrong. The Fed is setting markets up for another crash. Why? Because they've set in motion a stock market mania we have not seen since the 2000 tech bubble. I can't put it more succinctly than that. That is just brilliant right there. But this time, while we're still in a recession and in a mania, and it's important to recognize this, and like all manias, it ends badly. The amount of errors keep building up. We're having the highest market valuation ever. Market cap to GDP 151% on Friday's close, with an old GDP data, hence the real figure is higher. The chart from the beginning of June. And he shows the chart here, just continuing to climb. We have the lowest put-call ratios ever, meaning everything is on one-sided and complacent. Well said. We also have the highest unemployment ever, at least since the post-World War II period. The highest unemployment in the post-World War II period was 10.8% in 1982. Friday's job report was accurate as the Fed inflation model, totally misrepresented of the real economy, as 4.9 million unemployed people were counted as employed. Yes, I'm glad they pointed out. 13.3% reported really north of 16% and perhaps much higher. Facts is we are in a historically disastrous environment. Into that. And of course, we're witnessing the largest deficit, approximately $4 trillion in monetary intervention ever. He's showing that chart here from the Federal's own data itself. Again, I'm kind of going through this because it's a pretty lengthy article, but it's just put a link inside the description so you can go through it on your leisure. The largest disconnect from corporate profits ever, even worse than during the 2000 bubble. The only precedence for this was in 2009. Then markets retraced to the 50-day moving average and then rallied on from there to new highs. Back then it took years. Perhaps this time it would take weeks. Who is to stay in this environment? My point here, the combination of all these factors that contribute to the largest dislocation we've ever seen, only perhaps rivaled by the NASDAQ bubble of 2000. Look at this chart. It's hockey sticks. Except now we have trillion-dollar market cap companies that trade at massive forward multiples and experiencing unseen multiple expansion during a time when there is little revenue or earnings growth. And it's not just this year. It's all started in 2019 and is now extended into 2020. And that's the definition of a mania. Exuberant embracing of a vertical stock market rally by a majority of people of stock market valuations that are entirely unrealistic and untethered from the economic reality on the ground. A complete disregard for risk in markets that move vertically in one direction. And of course, the cheerleading. We're back. Jim Cramer celebrated a miscalculated jobs report on Friday. Trump celebrated the biggest job gain ever, and the real unemployment rate actually went north of 16%. And reality is a bounce to be expected of a disastrous, historic shutdown. It's not an accomplishment. But the cheerleading trophy goes to see who else? Larry Kudlow celebrating some story in the stock market and declaring himself a winner. And you could click on that. America's coming back. I'm not going to click on that now, but encourage you to take a listen to it. The same person that declared the coronavirus contained before killed over 100,000 people. The same person said we're killing it on the economy only a few months before it collapsed. I know it's election year, and they have to cheerlead. The polls are looking terrible for Trump, and I think he's starting to recognize, as he complained on Twitter last night, more and more traditional Republicans are getting vocal and not supporting him. Last week it was James Mattis and the other generals that rebuked him, including his former chief of staff, John Kelly, and this weekend it was George Bush, Romney, and Colin Powell. It all reeks of desperation, and I keep coming back to this point. What happens when markets suddenly price in Democratic win in November? The tax landscape would change drastically. Stocks already massively stretched out to what would have to contend with further reductions in after-tax earnings outlooks. And Goldman Sachs is crunching the numbers on the impact. Wow. There you go. Also, reopening everywhere. But tell me, what's the evidence of a drastic reduction in COVID cases? Yes, there's a slowdown in key states following lockdowns, but also a massive increase in many others. Newsflash, the virus hasn't gone anywhere. It's migrating. Fact is, the number of new infections worldwide continues to increase, while deaths have been decreasing in aggregate. I also have to point out that this is what you would expect due to lockdowns and social distancing measures. Be clear, cases are rising in many states. Take Arizona as an example. Look at this case, it's jumped here. But COVID is largely ignored now as a risk factor, despite the fact that this Sunday saw the highest new infections globally yet. While infections have slowed down dramatically in many states, we can thank shutdown measures and social distancing. Well, those measures are out the door now. That's due to the recent and he's showing pictures of that. So you tell me, the virus is not gone. The numbers are bigger than ever. Now we're entering a new phase. I seriously doubt that there's any political will to shut down the economy again. I don't know what will happen with reinfection rates, but the virus, which has shown itself to be active in warm climates as well, think Arizona, is reasserting itself. We will know in the next few weeks. Also in the next few weeks, earnings reports, reality checks. As it stands, markets and individual stocks are stretched to the hilt. See that again. Again on Friday. Stocks continue to scream out. Albert Broad, he's going many charts. I love the charts here because they give you such a vivid picture of what's actually being shown, and massively stretched charts reflecting no economic reality, with tech taking the cake with new all-time highs far above the upper monthly Bollinger Band again. Manias are reason defined by definition. They can go farther than anyone expects. Well said. Too strong is the draw and chase of the Fed put, is which advertises delivering Spider Index turning green for the year this week. Look for the S&P 500 to turn positive for the year with a boost from the Fed in the weeks ahead. That sentiment at the moment, and probably the most frustrating aspect of a mania. The most reckless look the most right and the most reasonable, the fools for not chasing or trying to fade. That's true. I've kind of jumbled that up, so you might not have got the meaning enough, but it's just, when the sentiment is moments, it's frustrating because you know that this is insane. Will they go straight for that 3,300 plus gap from February? I can't say. I suppose in an environment where nothing fundamental matters, anything can happen. This week, Powell will add more progress and perhaps yield curve control. Every aspect of these markets is manipulated at the moment, and every tiny dip is relentlessly bought, as it is in any mania. Yet the size of dislocations continue to strengthen the case, and indeed, the number of open gaps are increasingly looking to be the Achilles heel of this market. Never mind historic valuations. Remember the non-stop gaps in Q4 of last year leading to the top in February 2020. They all look like child's play compared to the ones we have now. And guess what? All those gaps last year when the market seemed invincible, all of them filled. This market has some gap filling to do, especially in context of a VIX that looks to want to party some again at some stage. Shows here, charts here. Look, I've always said in recent months that this is all about control. Can the Fed control the market equation? For now, it clearly has, but it's created a bloated pig of a market as a result. And this pig is now big and fat, and any sizable reversion could itself shake the very confidence and optimism the Fed has sought to propagate. The Fed is pending a fantasy. A fantasy says money and wealth can be created out of thin air with nothing of substance needed to back it. No growth, no earnings, none of that. My premise, markets and the economy can live on multiple expansion alone, but this is what the market ran on in 2019, and it is what is running on and again. Like Druckenmiller, I've been surprised at the vertical nature of this move, but unlike him, I don't attribute it to the reopening optimism. I attribute it to only one thing, a stock mania created by the overzealous Fed that's trying to save the economy, but in the process created the largest bubble of our time. And with that, they put in the conditions in place that markets could be faced with another crash. I may well be wrong on this, but the Kirkus-like atmosphere in context of historic valuations, optimism and giddiness along with bears crying are exactly the type of conditions that have ended bear market rallies in previous periods of history. To think it's different this time is to count on it being different this time. Well, in one aspect, it is different this time. The first stock mania inside of a recession, not discounted far below at all-time highs, but rather sitting on top of the largest disconnect between the economy and the stock market ever, inside of a recession, no less. This is just fantastic. We've never seen this before. We've never been here before. This is just incredible to witness because we're living in the most interesting time to be born and live through this particular time to see. It is not going to be pretty. It is not pretty because as the deaths go on, there's so much social unraveling. Again, you really need to do things differently. And I'm not here to be debating uncertainty, but it's never been more of a pertinent time to pay attention to everything that's going on globally, especially what's going on in the economy, because it affects everything that you do. If this video has been any value to you, please subscribe, leave some comments, hit the like button, and until my next video, I'm out.